Okay, Assalamualaikum and hi everyone. Okay, today we will learn on the last part, which is part 4 for the chapter 7. Okay, so we will cover on the last part, which is risk management for interest rate. Okay, so kita akan cover on this chapter. Okay, so bila kita belajar risk management, kita belajar apa risiko ataupun apa risk-risk yang kita akan hadapi. Okay, so risk management for interest rate, sebab ini adalah berkaitan dengan international finance. Okay, so bila ada berkaitan dengan currency, dia relate with the interest rate juga. So sebab kita nak foreign exchange kan, bila kadang-kadang kita nak pinjam dalam mata wang asing, so that's why dia melibatkan interest rate. Okay, so kalau you ingat dalam video part 3 kita ada cakap yang the company will borrow and then dia akan deposit duit dia dekat negara dia ataupun dekat negara luar, home currency ataupun foreign currency. Okay, so kalau kita fikir, kalau interest rate untuk borrow, is it bank akan bagi in the higher rate or lower rate? Kalau borrow, dia mesti akan bagi on the higher rate kan? So bila higher rate, dia akan menyebabkan the investor ataupun the foreign currency, orang tu, dia akan ter-effect lah disebabkan higher interest rate. Tapi kalau deposit, untuk deposit, if we think very clear, tak mungkin bank tambah dekat foreign currency akan menawarkan higher interest rate. So diorang mesti akan reduce dia punya interest rate for deposit, sebab deposit ni maksud dia kita simpan duit dalam satu bank and then at the end of the matured date ataupun at the end of the period, kita akan keluarkan balik duit tu sekali dengan deposit interest rate. Maksud dia interest rate yang telah disediakan untuk bank tu. Tapi kalau kita borrow it means that kita kena bayar balik the bank untuk pinjaman yang kita buat. Macam kita pinjam macam biasalah. Kalau kita pinjam duit dekat bank untuk beli kereta pun, dia ada interest rate, kita kena bayar tiap-tiap bulan. So sama juga. So daripada risk-risk ni lah kita nak tahu macam mana kita nak control, nak kawal, nak set a policy untuk mengurangkan risiko ni. Okay, but first thing first, kita kena tahu the interest rate risk is the risk incur losses due to adverse movement in interest rates. Okay, so ini adalah risk. Okay, so many companies borrow either fixed rate of interest or borrow at floating rate. Apa fixed rate? Fixed rate ni maksud dia interest rate dia tu, contoh interest rate dia 4%. So daripada awal sampai habis adalah 4%. Tapi dia akan bagi disadvantage, maksud dia ada keburukan dia. Kenapa? Okay, cuba you fikir kalau on market interest tiba-tiba lower than 4%, which is that 3%. So it means that the borrower kena bayar 4% je lah. Even the market dah turun dia punya interest rate to the 3%. Kalau floating ataupun variable rate, can I just stay here? Variable rate ni dia follow the market. So it means that kalau market 3%, so dia 3%. Kalau the market 4.9%. So for floating rate dia lebih ikut kepada market. Okay, so there is some risk in deciding the balance or mix between floating and fixed rate debt. So dia ada risiko-risiko dia yang tersendiri. So too much fixed rate debt create an exposure to failing long-term interest rate, and too much floating rate debt creates an exposure to a rise in a short-term interest rate. So, ini adalah dia punya risiko-risiko. Risk. So, macam saya cakap tadi, kalau orang yang ambil floating rate, kalau the percentage ataupun the interest rate kurang daripada fixed rate, so it's good. However, it's disadvantage kalau the floating rate punya interest rate is higher than fixed rate. So, dia macam vice versa dengan yang atas. Okay, so fixed rate debt. Apa tu fixed rate debt? Interest is predictable but might be higher than it need to be if the market interest rate fall. Okay, ini yang I maksudkan dekat atas tadi. So, dia explain balik. Sama juga dengan floating rate. Floating rate is unpredictable. Memang sebab fixed rate kita dah tahu pada awal sampai habis 2 to 4% kan. So, it is predictable. Tapi kalau floating, dia ikut market. So, dia tak unpredictable. So, some effect will cancel if there are both debt asset and liabilities. Even if debt asset match debt liabilities, there is basis risk because of the interest rates might not move together as they are determined using different bases. Okay, so ini yang dimaksudkan dalam floating rate debt. So the interest rate risk is faced by the company with floating and fixed rate debt. It can arise from gap exposure and basis risk. Okay, so this is continue from the type of interest risk gap. Okay, so this is an exposure to the interest rate arise. Okay, the exposure to the interest rate arise due to anticipated income and payment in the future are depending on the interest rate at that time plus an asset whose market value changes whenever the market interest rate change. Okay, so dia cuma nak cerita kenapa interest rate change. So, disebabkan on this method. Kenapa the interest rate movement dia berubah-ubah disebabkan oleh this reason. So, A sebab A, B, C and D. So, I nak you read for your own self, on your own self sebab this one just on the theory part. Okay, so dia just nak cerita dekat you what is the reason. For example, untuk A tu, the risk for interest rate movement due to, okay, disebabkan many companies borrow at the floating rate of interest. Itu yang menyebabkan the interest rate movement changes ataupun perubahan interest rate. So, ini adalah interest rate movement reason. Okay, so you can look by yourself and read and please do some notes on this. Okay, so kita nak tengok whether the firm is exposed to the interest rate risk by using a gap analysis. Okay, so in this slide kita akan belajar on macam mana kita nak tengok whether the firm termasuk ke tak dalam interest rate risk. Okay, so apa tu gap analysis? Gap analysis is the principle of grouping together asset and liabilities which are sensitive to the interest rate changes according to their maturity dates. Two different type of gap may occur. Okay, so apa tu asset dengan liability? Maksud dia, kita kaji gap analysis ni adalah tengok dekat dia punya asset and liabilities yang sensitive to the interest rate changes. Okay, for example, kalau asset adalah when we buy the investment asset. So, bila kita buy investment asset, dia melibatkan interest rate kan. So itu we call as our asset. But for liabilities, for example, is we issue the bond. So when we issue the bond, dah tentu kita akan terlibat dalam interest rate. So ini yang kita akan kata group together asset and liabilities which are sensitive to the interest rate changes. Kita tengok based on asset dengan liabilities. Okay, so kalau negative gap, it occurs when a firm has a large amount of interest sensitive liabilities maturing at a certain time or in a certain period than has interest sensitive asset maturing at the same time. The difference between two amount indicates the net exposure. Okay, so maksud dia apa negative gap adalah firm ada dia punya interest on liability is more than interest on asset. So that's why we call as a negative gap. Ini yang kita akan membandingkan. So as I mentioned before, interest sensitive liabilities, for example, is the issue bond. However, untuk the interest sensitive asset adalah for the investment. So itu yang okay, so apa yang dimaksudkan dengan negative gap, which is the interest for liabilities is more higher than interest for the sensitive asset. Okay, so the second one, positive gap. Positive gap tu macam mana? Positive gap if the amount of the interest sensitive asset maturing is exceed daripada interest on asset is exceed daripada interest of liabilities. So itu yang kita call as a positive gap. Okay, basically when there is negative gap, ini yang kita boleh nampak kata the company face exposure if the interest rate rise by the time of the maturity. So maksud dia kita akan nampak the company face with the interest rate risk bila the negative gap. So the interest rate is high. So that's why dia nak tahu whether the company facing with the interest rate risk atau tak by using the gap analysis. So with a positive gap, the company will lose out if the interest fall. So ini boleh jadi juga, ini boleh jadi dekat dua keadaan, satu negative gap, satu positive gap. Kalau negative gap, the company akan face with the interest rate kalau the interest rate is higher. However, the positive gap risk akan berlaku juga dekat interest gap kalau interest rate fall. So it means that dia lose lah, dia apa kita panggil, dia rugi disebabkan oleh interest rate dah jatuh. Okay, so sekarang kita nak masuk on the basis risk. Kita ada sebut ni on the previous slide. Slide sebelum ni kita ada call of the basis risk. Apa tu basis risk? There is where an organization has asset and liabilities with floating interest rates, but the interest rate are set on different bases. Okay, apa tu different bases? There is difference between future price and spot price. Itu yang we call as the basis. So, bila dia kata different bases is a difference between future price and spot price. Okay, maksud basis risk, asset organization dia ada asset and liabilities with the floating interest rate. Tapi interest rate tu dia ada different basis, satu future price, satu spot price. So, bila kita kata dia ada dua different interest rate, bila kita tolak by using this formula, kita akan dapat basis. Itu yang kita calculate on the basis untuk interest rate risk. Normally, the future do not completely eliminate the interest rate exposure, and the remaining exposure is known as a basis risk. Okay, ini adalah definition juga untuk basis risk. So, siapa-siapa yang nak lagi faham, so basis risk is the future do not completely eliminate interest rate exposure. So, the remaining exposure is mean that the basis risk. Senang cakap, dia adalah the differences between future price minus spot price. So, you akan dapat the basis. Okay, so this is the example. Macam mana dia kata, for example, a company might borrow at a variable rate of interest, with interest payable every 6 months and the amount of the interest charged each time varying according to whether short-term interest rate has risen or fallen since the previous payment. Okay, so ini yang dimaksudkan, dia bagi contoh on macam mana basis risk dapat berlaku disebab on the variable rate of interest. Okay, variable rate of interest sama dengan floating interest rate. So, you kena tahu. Kadang-kadang dalam soalan dia mungkin akan tanya variable. So, you have to make sure yang you tahu the floating interest rate and variable rate of interest. Okay, next we go through on the causes of the interest rate fluctuations. Okay, kenapa interest rate fluctuations disebabkan oleh the structure of the interest rate. Okay, so the structure of interest rate, kenapa interest rate differ daripada different market and market segment. Okay, dia disebabkan oleh risk yang terpaksa ditanggung oleh the company itself yang menyebabkan the interest rates is different with the market segment. The second one need to make a profit on the relending, the size of loan, the different type of financial asset. The 5 is government policy, and the last one is the duration of the lending. Okay, so ini adalah point-point yang kenapa the interest rate adalah different daripada market segment. Okay, so the next one is the yield curve. Okay, what is yield? Yield is a pulangan. So, curve adalah graph ataupun keluk. If kita translate dalam bahasa Melayu, pulangan keluk. Apa maksud pulangan keluk? It means that kita kena tengok graph. So, untuk kita tengok yield curve, dia ada graph-graph dia tersendiri. So, basically it is an analysis of the relationship between the yield on debt with different period of maturity. Okay, so yield on debt adalah pulangan daripada hutang. So, it means that kalau in this is number 2 and the different period maturity is number 6. Okay, so itu adalah relationship. Kita nak tengok different period of maturity dengan pulangan daripada debt. Okay, so there are 3 types of yield curve. The first one, normal yield curve. The longer maturity bond have a higher yield compared to shorter term bonds due to the risk associated with time. Okay, so maksud dia normal yield curve ni, semakin lama tempoh masa maturity bond, semakin tinggi pulangan untuk bond yang dia akan dapat. Okay, ini untuk normal yield curve. So, kenapa dia wujud macam ni? So, the higher the maturity ataupun the higher the maturity, the higher yield disebabkan oleh the higher juga risk. That's why ada risk. So, maksud dia bila makin lama kita tempoh masa bond tu, dia ada higher risk. Higher risk is mean that kita tak tahu uncertainty yang akan berlaku in the future kan. So, bila kita tak tahu apa yang akan berlaku dalam masa-masa depan, so it mean that we involve with the higher risk. Bila kita akan involve with higher risk, so kita punya yield ataupun kita punya pulangan akan tinggilah. Yield on debt yang kita buat tu. So pulangan itu adalah untuk normal yield curve. Untuk second is inverted yield curve. Inverted yield curve is mean that the short term yield are higher than the longer term yield. Okay, maksud dia apa yang kita boleh kata, inverted ni dia berbeza dari normal yield. Inverted ni dia kata short term yield adalah higher than the longer term yield. So untuk tempoh jangka masa yang short term, dia akan dapat higher yield. So untuk yang ni short term, this one is long term kan. Okay, so short term decrease in short term ataupun I state here short term, dia akan menyebabkan kita akan dapat higher yield. Okay, so ini adalah untuk inverted yield curve. Kenapa dia kata short term akan dapat pulangan untuk debt lagi tinggi berbanding dengan long term yield? Disebabkan this is the sign of upcoming recession. Recession dia berkaitan dengan ekonomi. It means that on that time the economy is not good. So bila not good, so dia akan letak on the short term pulangan untuk jangka masa short term period untuk mendapatkan higher yield of debt. So itu untuk inverted. Untuk normal tadi, higher long term maturity will get higher yield disebabkan oleh higher risk. Tapi in this case, when there is short term, so there is a higher risk. Okay, ini adalah disebabkan oleh ekonomi. Ekonomi tak bagus, that's why dia letak on the short term sahaja. Untuk flat yield curve, the shorter and longer term yield are very close to each other, which also predictor of an economic transition. So ni juga relate with the economy. So maksud dia perubahan ekonomi yang menyebabkan kalau nanti kita akan go through on the curve macam mana. Dalam flat yield curve dia ada dua curve, satu shorter and satu longer. So nanti kita akan tengok macam mana yang dia kata are very close to each other. Okay, so the greater the slope, the greater the gap between short and long term rates. Ini yang kita dapat conclude. Okay, so basically bila ada yield curve, dia ada teori-teori yang mengukuhkan lagi the shape of the yield curve. So apa teori dia adalah on this. The first one, liquidity preference theory. The second one, expectation theory. The third one, market segmentation theory. Okay, so basically this theory, dia ada cerita kenapa normal yield ni dia longer maturity bond will get the higher yield. For inverted, dia vice versa dengan yang nombor satu. And flat yield, dia ada shorter and longer yield are very close to each other. So these theories already explain to you kenapa all this happen in the yield curve. Okay, so this is the slope yang kita kena tahu. Okay, so slope atau curve lah. So this is the normal yield curve. So apa yang kita boleh nampak, the higher the maturity years, the higher lah dia punya yield yang dia akan dapat. So kita akan call this as upward sloping. So dia juga support by the liquidity preference theory. So nanti kita akan go through apa yang liquidity preference theory have been stated. Okay, so untuk the second one is inverse. So as you can see here, semakin sikit tempoh masa ataupun kita kata short term, in the short term dia berjaya untuk ambil higher yield. But at the end of the years, semakin lama dia semakin berkurang dia punya yield of debt. So dia juga kita boleh tengok on the evidence untuk expectation theory to support on this curve. Okay, so this is basically the theory. First is the liquidity preference theory, and the second one expectation theory, and the third one market segmentation theory. Okay, so for the liquidity, kita ada nampak dia sloping upward. So you boleh tengok balik on your previous graph ataupun previous kita punya slide ni on the liquidity preference theory, which is the normal kan. So bila normal, on this time, this theory state yang the cash is preferable. So the compensation to lenders is needed for long-term loans. So the investor prefer for more liquid. So as we know, the more liquid is the cash, shorter maturity investment. They will need to be compensated if they are deprived of cash for a longer period. So maksud dekat sini, on this time the cash is now preferable. So bila preferable, even dalam finance, dia ada state, kalau you ingat, the duit RM1 sekarang akan meningkat ataupun akan bertambah untuk dalam tempoh masa 20 tahun lagi. So it means that the amount of 20 years, if you time value of money, kalau you ingat, the time value of money in the finance, time value money dalam finance, dia kata RM1 now is different with the 20 years. For another years lah, dia akan berbeza, semakin banyak duit, the amount is different. So itu yang dia pegang dalam liquidity preference theory. So that's why the longer the maturity period, the higher the yield. Disebabkan the theory yang dia orang pegang on the time value of the money. Okay, so next, expectation theory. Basically, expectation theory kita dah cover before this. So, I hope that you remember what is expectation theory. Expectation theory is when the future interest rate are expected to be lower, the yield curve might fall. So, sekarang ni sebab expectation. So, bila expectation, dia relate with the future interest rate. So, future interest rate. Bila dia relate with future interest rate, so it means that when there is difference, kita jangkakan the future rate of interest akan berkurang. So that's why the yield curve akan jatuh. In this case, kalau you tengok balik on your graph, dia punya graph tu jadi macam ni. So a curve, kalau kita baca dekat sini, a curve that falling steeply from left to right indicate that the rates of interest are expected to drop in the future. Itu yang dimaksudkan. That's why bila dia expect yang kata the future interest rate akan berkurang, sebab tu dia punya graph ni menurun, ataupun we also call as a negative lah kalau dah berturun macam tu. And then there is more demand for short-term securities. So I continue balik. Okay, so there is more demand for short-term securities than long-term securities, since investor expectation that they will be able to secure higher interest rate in the future. So no point to buy the long-term asset now. So that's why in this graph you can see the graph is different from the normal curve. Okay, so the last one is the market segmentation theory. Okay, so the last one theory is market segmentation theory. Okay, so in this theory, there are the state yang Lenders and borrowers specialize in different term and interest rate are a function of supply and demand. Okay, so siapa supply, siapa yang demand. Kalau kita tengok, the lenders will be demand. Kenapa? They demand for the money. But for the, sebab bukan dia demand for the money, the lenders ni sebab dia menjadi demand daripada orang ramai untuk membuat pinjaman. For the borrowers, dia akan supply, which means that the borrowers is a function of the supply. So ini untuk lenders and borrowers. This explain why the yield curve in reality may be king ataupun discontinue. Maksud dia king ni terputus. Dalam yield curve dia, yield curve terputus. Sebab dia ada dua function ataupun satu for the short term and satu for long term. So there is different players in the short term and of the market and the long term end of the market. So as a result, the two end of the curve may be different shapes. Okay, so ini yang kita akan belajar on the flat yield curve. Tadi kita cuma tengok normal and inverse ataupun inverted punya yield curve kan. Sekarang ini melibat flat yield curve. So, macam mana, kenapa dia different? Sebab they are influenced independently by different factors. Factors apa? Factors yang terlibat dalam market segmentation. Okay, so basically this is the flat curve. So, flat curve under market segmentation theory. So, bila market segmentation theory yang kita dah belajar, dia ada dua type of securities in one curve. So, ini adalah flat curve. So, flat yield curve. Okay, so apa yang dimaksudkan? Under market segmentation theory, dia ada cakap there are many ataupun different players. Okay, so in this market segment, dia ada players yang dalam short term securities and dia ada long term securities. So if you can see the trend untuk both short term securities and long term securities is the same. Yang you akan dapat higher yield at the end of the year to maturity. Apa yang beza dia adalah dia ada ruang kosong here, discontinuity between short term and long term. So ini adalah kita call as the arbitrage line linking the two curve. So it means that untuk short term securities, for semakin kurang year to maturity is the low the yield yang dia akan dapat, the longer until at the end of the short term securities baru dia akan dapat higher yield. Kalau you tengok on the long term securities, dia lebih kepada mendata sikit. So the higher the maturity date, the higher the yield yang dia dapat gain. Itu beza untuk market segmentation. Dia ada dua securities dalam satu curve ataupun dalam satu graph. And then dia punya graph tidak bersambung between short term and long term. So this is the importance of the yield curve to financial managers. So you can read by yourself on this one. This just for the benefit untuk financial manager. So kalau financial manager dia kena tahu untuk each curve. Kalau kita tengok on the inverse yield curve, dia ada state yang kata the short term period akan menyebabkan kita akan dapat higher yield of debt. So kita akan dapat pulangan hutang tu lagi tinggi. Kenapa? If you read back into your notes, dia ada kata it is a sign of a recession. So bila recession, financial manager bila dia look at the graph, dia dapat tahu whether the company, whether the economy right now is good or not, and when they should have ataupun gain a higher yield on debt. So that's why this is important to the financial managers. So you can read this one by yourself, and you can do some notes. Okay, so for this in this slide and above, yang slide lepas ni, kita akan ada theory with plus with the calculation. Okay, so apa yang kita nak belajar in this slide on the basic hedging method untuk interest rate. Okay, so method yang first adalah matching. So matching macam biasa yang sebelum ni kita ada belajar. It is apa-apa macam berkaitan kita kena matchkan, and then kita boleh set off kan. Itu adalah matching kita belajar sebelum ni. So matching is where liabilities and asset with a common interest rate are matched. So common interest rate tu sama. Match which mean that interest untuk liabilities and the asset is equal or match. So the matching involves set of interest income. Interest income adalah interest income daripada deposit. Interest income adalah deposit yang contoh kalau kita masukkan duit kan, so kita dapat interest, so itu we call as interest income. So against interest payment adalah bila kita issue bond, so it is liabilities kan. So kalau deposit adalah asset, itu yang we call as asset, and this one is liabilities. So bila kita issue bond, kita kena pay the interest, so itu adalah interest payment. So ini matching, dia nak set off interest income dengan interest payment, so that the interest rate exposure is to the net amount of the interest payment or net interest income. So dia nak set off. Tapi this method susah. It will be difficult because the interest payment on loan are likely to be much higher than interest payment on deposit on investment. Okay, contohnya macam I bagi tadi kan, the interest payment ataupun interest on bond tadi, mestilah bank akan letak higher interest rate. Tapi kalau interest on the deposit ataupun interest income, mesti bank akan letak rendah. Tapi it depend on the bank itself lah. So ini dari perspektif depositors and borrowers. So that's why untuk this method is very difficult. So the matching is likely to be more practicable for financial institutions such as bank. So ini boleh diguna pakai, tapi usually akan dipraktiskan ataupun dia akan diaplikasikan dalam bank. Okay, so this you can read on the example. So subsidiary A of a company might be invest in the money market at LIBOR. Okay, LIBOR ni apa? London International Borrowing Offered Rate. Maksud dia LIBOR, ataupun kalau KL pun ada juga. In Malaysia we call as KLIBOR, Kuala Lumpur International Borrowing Offered Rate. Maksud dia apa LIBOR and KLIBOR ni? LIBOR is a organisation yang akan set the interest rate. Diorang yang akan tetapkan berapa interest rate on the current market. Okay, so it means yang subsidiary A dia akan invest the money dalam mengikut floating rate. Sebab KLIBOR ni dia lebih tetapkan interest, so dia tetap interest rate for market. So mana-mana yang ikut KLIBOR or LIBOR, dia akan follow that country punya interest rate lah. And then might be investing in the money market at LIBOR, and subsidiary B is borrowing through the same market at LIBOR. So if LIBOR increase, subsidiary A return increase, subsidiary B borrowing cost increase. So the interest rate on the asset and liabilities therefore are matched. Sama lah sebab dua-dua follow on the LIBOR. So bila LIBOR, when the market is increased, so anything the interest rate also will be increased. Okay, next is smoothing. Smoothing is where a company keep a balance between its fixed rate and floating rate of the borrowing. So this one is known as smoothing. Okay, so for example, when a company might choose to have 15% of its debt capital in the form of fixed interest liabilities and the others 15 in floating rate liabilities. So ini adalah contoh a company keep balance. So sama 50% in fixed interest and 50% in the floating rate interest. If the interest rate rises, the disadvantage to a higher variable interest rate will be offset by comparatively low fixed rates. Sebabkan fixed rate dia tetap. So bila dia tetap, yang hanya akan berubah adalah floating rate. So bila andai kata floating rate increase, the disadvantage dia punya kelemahan adalah to the variable interest rate will be offset dengan low fixed rate. If the interest rate fall, the disadvantage of the fixed rate will be offset by a lower variable rate. Itu yang dimaksudkan. So a rise in the interest rate will make the floating rate loan more expensive, and this will compensate for by the less expensive fixed rate loan. Okay, next is asset and liability management. Okay, so apa yang dimaksudkan asset and liability management adalah managing risk in financial asset and liabilities. So in a bank, for example, asset and liability management involve monitoring risk, such as interest rate risk, credit risk in the bank portfolio asset and liabilities. Okay, contoh in the bank perspective, asset adalah apa? Asset, and what is liability? Okay, bagi bank, asset adalah when dia provide loans to the customer. Dia provide. Tapi kalau liabilities, when a customer deposit duit di bank. Okey, ini adalah catatan untuk bank. Bank akan contoh kalau kita deposit ataupun kita simpan duit kita di dalam bank. Bank akan classify benda tu as liabilities. Maksud dia hutang kepada dia. Kenapa hutang kepada dia? At the end of the day nanti dia kena bagi balik duit yang kita deposit dalam bank kan. Okay, that's why they record as liabilities. So ini adalah macam mana bank akan record dia punya asset and liabilities. Asset dia adalah when dia provide loan to the customer. So it means that dia akan dapat balik duit dia. Itu adalah dia punya asset. So bila wujudnya macam ni, so kita akan kata the asset are matched with the liabilities in order to control risk arising from gap exposure and basis risk. Okay, ni adalah macam mana apa yang akan berlaku dalam asset and liability management. Okay, next basic hedging method is forward rate agreement. So it means that FRA adalah kegunaan untuk short term interest rate risk to hedge. Ingat, to hedge tu apa? Business activity yang akan reduce the risk. So kegunaan FRA adalah untuk short term interest rate risk sahaja. So the forward rate agreement is a forward contract for an interest rate. FRA negotiate over the counter with the bank. In some respect, an FRA is similar to the forward exchange rate. So it is a contract arranged now that fixes the rate of return for a loan or deposit period starting at some time in the future. Itu adalah contract arranged now that fixes the rate of interest for a loan or deposit starting at some time in the future. For example, an FRA can be used to fix the interest rate on 6-month loan starting in 3 months time. So maksud dia 3 bulan daripada sekarang dia dah start untuk letak the interest rate on the 6-month loan. Itu yang we call as forward rate agreement. So forward rate agreement kita akan go through lagi kejap lagi. There are two type, which is that FRA untuk deposit and borrowing and deposit. Okay, so this is the forward rate agreement. Okay, so macam kita dah belajar sebelum ni, kita akan try untuk ubah dia punya currency, tapi kita akan lock dia punya currency, tapi untuk yang ni kita akan lock dia punya interest rate. So untuk interest rate kita akan lock dia punya interest rate. That's why untuk FRA dia ada two perspective, under borrowing dengan deposit. Okay, so untuk under borrowing, the company concerned about interest rate rises. Kenapa dia concern on the interest rate rises? As kalau kita fikir in logic, untuk bank dia akan provide the interest rate is higher when the person ataupun untuk company borrow dia punya duit. So that's why the company concerned on the interest rate rises. So the firm will buy a matching FRA from a bank and other market maker, and thus receive compensation if rates rise. So the company can enter into FRA with a bank that fixes the interest rate for the borrowing at a certain time in the future. Okay, maksud dia company dia akan lock, contoh dia akan lock at the some amount of the interest kan, some interest, and then bila dia lock, apa yang dia akan ataupun apa consequences dia if the actual interest rate higher daripada rate agreed, so the bank akan pay the company differences. Itu yang macam pro untuk FRA ni lah. Maksud dia when contoh dia company and bank lock the same interest kan. So kalau actual interest tu lagi higher daripada on the rate agreed, so bank akan pay the differences. Tapi kalau actual interest rate is lower daripada rate agreed, maksud dia on that time the interest rate is lower daripada yang dia agreed, siapa yang nak kena bayar? The company need to pay the differences. So itu yang akan berlaku when for the forward rate agreement for the borrowing. For the deposit, dia macam berlawanan daripada FRA borrowing. So deposit dia lebih mementingkan on the interest increase. So maksud dia akan concern on the interest rate fall. Kenapa rate fall? Sebab dia akan menyebabkan dia punya deposit income akan lower, ataupun interest income dia akan lower kalau dia punya interest rate fall. That's why the concern. So the firm will sell a matching FRA from a bank or other market maker and thus receive compensation if the rates drop. Okay, so ini dia punya apa tindakan firm, dia akan sell a matching FRA daripada bank kalau the rates drop. Okay, so the company can enter into FRA with a bank that fix the rate of interest for deposit at a certain time in the future. If the actual interest rate prove higher, kalau interest rate tu higher daripada rate agreed, the company yang kena bayar kepada bank untuk the differences. Tapi kalau the actual interest lower daripada rate agreed, so the bank akan pay the company the difference. Itu beza untuk FRA borrowing dengan deposit. So what you need to know, you need to the consequences daripada kalau untuk borrowing apa akan berlaku, tapi kalau untuk deposit apa yang akan berlaku. So you need to make sure yang you tahu the differences between FRA borrowing and FRA deposit. Okay, so this is the example question for the forward rate agreement. Okay, so a company financial projection show an expected cash deficit in 2 months time 8 million, which will last for approximately 3 months. So it is now 1 November 2019. The treasurer is concerned that the interest rate might rise before 1st January 2020. The protection is required for 2 months. And then the treasurer can lock into an interest rate today. Okay, so ini yang kita kata tadi, for the FRA, dia akan lock the interest rate for a future loan. The company take out a loan as normal. The rate is paid is going market rate at the date the loan is taken out. It will be received or pay compensation under the separate FRA to return to a lock-in rate. So ini dalam in the question nanti dia akan state macam ni, and then dia akan mention yang how much the month, sebab in FRA as I said before, dia akan berlaku for short term only, so 3 until 6 months. Okay, so in this case, dia dah state 2 to 5. Apa maksud 2 to 5 is the agreement start in 2 months time and ends in 5 months times. Okay, so the FRA is called as simple annual interest rate for borrowing and lending, which is 5% and 4.7%. Okay, 5% interest rate untuk borrowing. Sebab bank akan charge higher interest rate untuk siapa-siapa yang borrow. But untuk deposit, dia akan charge lower, which means that lower than the borrowing rates. So the borrowing rate is always the highest. So it means the borrowing rate is 5%. Okay, so dia minta kita calculate the interest payable in 2 months time, the market rate. Okay, so as we can see here, 7%. So it means that the borrowing is increase 7%. But kalau untuk deposit punya side, the deposit 4%, the deposit is lower daripada yang dia providekan. So ini kita akan tengok macam mana cara untuk menjawab soalan. Okay, so basically now is 1st November. Dia dah beritahu in 2 months time. So 2 months time is mean 2 bulan. So 2 bulan, in this case the company is protected from a rise in interest rate but not able to benefit from a fall in interest rate. It is locked into rate 5%. FRA hedges the company against both an adverse and favorable movement. Okay, so kita tengok apa situation untuk 7% and 4%. So the interest payable yang kena bayar 8 million, the amount times with the 7%, the new punya interest rate, and you times with the 3/12. Sebab 3/12, if you can read into your questions, dia ada state yang dia ada tinggal 3 months left kan. So that's why kita calculate as 3/12. So sama juga dengan 4%. So you akan dapat 140,000 and 80,000. For the compensation receivable is 40,000 and compensation payable is 20,000. Okay, so macam mana you dapat compensation receivable and payable based on the log yang kita dah buat? Kalau you refer back to the questions, kita ada log the effective interest rate of 5%. So bila 5%, you have to calculate 8 million times with 5% times with 3/12. Sebab kalau kita kira pun dia ada state dalam question 3 bulan, and kalau you tak nampak pun ada dia state daripada 2 hingga 5 bulan kan. M tu 5 mime. So sekarang 2 mime, and then the balance is, sebab now is 2 mime, 2 bulan. So the balance is 3 mime. Sebab N dia 5 mime. So that's why dia kita kena kira 3/12. And then you times with 3/12, you akan dapat 100,000. So 100,000 is the interest rate yang you kena bayar. So untuk 7%, siapa yang nak kena bayar adalah bank. Kenapa? Sebab the interest rate yang actual is higher daripada pre ataupun agreed rate. Agreed rate adalah 5%. So that's why the bank needs to pay to the company the differences. Tapi in this case of the 4%, the actual is less than the agreed rate. So agreed rate adalah 4 point something, I didn't remember. So you look back in the questions, and the actual is 4%. So the 4% is the actual rate, the agreed rate is 4 point something. So it's menunjukkan kata the rate is decreased. So bila decrease, siapa yang nak kena bayar the differences is the company. So the company needs to pay to the bank for the differences. So ini adalah cara macam mana you nak calculate for the forward rate agreement. And then there are the state on the theory part. The FRA is separate contractual agreement from the loan itself. Could be arranged with a different bank. They can be a tailor-made to the company's need. Enable you to hedge for a period of 1 month up to 2 years. And then usually on amount more than £1 million, the daily turnover in FRA is now exceed to the £4 billion. Okay, so this is the last slide, which is the advantage and disadvantage for forward rate agreement. Okay, so I want you to read by yourself, and you can do your short notes, and anything bila in your final ask on this question, you can refer on your short notes. So dia relate with apa advantage kalau you buat FRA and apa disadvantage kalau you buat ataupun you aplikasikan the basic hedging method on the forward rate agreement. Okay, thank you very much for those that watching these videos, and I hope that you can do some revision for your finals. And anything, if you have any questions, do ask me, and have a nice day. Thank you very much.